Welcome to the weekly update, where we'll go over the action in the market for March 14th through the 18th, and then we'll see how things look for the week of March 21st through the 25th. And please forgive my voice if it sounds a little off. If you're a usual watcher of these videos, I seem to have a little bug right now, so my voice is not quite what it usually is as far as strength, but we'll try to power through and do my best, and I'll try to avoid any coughing and hacking as much as possible. But it was a pretty exciting week. It was a pretty powerful week. The market hit its low on Monday, and then from that time going into Friday's close, we had over a 7% gain just from the low to the close. And that's pretty powerful. We usually don't see moves that big within a week. And we did have the Fed come out and they raised interest rates for the first time since the pandemic. And they didn't raise them very much. And of course, now the big debate is, well, when you have inflation at the official rate of 7.9%, the real rate is probably 15, 16, 17%. And you've raised interest rates to 0.25%. And you even have short-term bond yields that are far outpacing the Fed funds rate. Is the Fed playing catch up? And then are they going to overdo things once this whole cycle is over, which could really bring down economic growth? Or are they doing what they should be doing? And there's the real back and forth strategy and debate that people use and people talk about, and it can change almost on a daily basis. And how we keep an eye on this is by looking at economic reports, getting a good feel for sentiment. How are people in the market feeling? Looking for those extreme readings, either extreme positive or negative, and then we use that as a contrary indicator. But let's go back over the week session just to kind of review things really quick. We did climb 6.2% for the week. What I mentioned at the beginning, that was from the low on Monday, and we set that low on the 14th. For the week, we ended up having over a 6% gain, which is pretty strong. And a lot of people who were just completely convinced that we were going down from here, and even our charts were showing that we could easily fall. The path of least resistance seems to be down, but we were getting pretty pessimistic as far as sentiment. And a lot of times when everybody is feeling the same way, you want to look at doing the opposite. And that's pretty much what happened for this week. What we're trying to see now is the bounce that we got out of this has improved the technical picture, especially on a daily basis. And please feel free to watch the daily charts. I put those up every day. That's why they're called daily charts or daily videos. And then I take more of a longer term, big picture view in the weekly videos. I try to show you different charts in the weekly videos than in the daily videos. There is some overlap, and I'll refer one to the other. So to really get as much as you can out of this, it would also help you to look at the daily videos. And I know people are busy and my videos tend to be kind of long and all of that. I'm just trying to help you the best that I can. And my philosophy has always been, okay, my videos are as long as I feel they need to be. If there's something that I need to say, then I keep saying it. And when I'm done saying that, the video stops. And that's kind of my overall philosophy. As far as volume over the past week, it was above average. So we're seeing good, healthy volume right now. We're looking at the technicals, which are still leaning more towards negative on the weekly charts. We saw a real shift over in the daily charts with our oscillators starting to turn up. They're pretty much positive now across the board, and we're starting to recapture some moving averages. Well, with the weekly charts, they go a little bit slower, so they're going to need to see more follow through if in fact we are going to continue the climb from here. So I'll point that out as I go through the different charts. We're getting near the end of earnings season. Of course, the thing that's on everybody's mind are inflation and interest rates, and then the different geopolitical concerns, specifically what's going on in Russia and Ukraine. And then our trend, looking at the ADX on a weekly chart, it is still negative, even though it's weakening just a bit because of the solid up week that we had. It's still giving us a pretty solid negative reading. So what are some takeaways that we can say about last week? And I thought I had the wrong date here, but it looks like that is the correct date. The FOMC, the Federal Open Market Committee, they raised interest rates. They had been, we pretty much say at zero, but there's really a range. They were from 0 to 0.25%. They raised that range from 0.25% up to 0.5% or 0.5%. So on a day in and day out basis, that rate will fluctuate, but it will stay within that range, or at least it's supposed to. A lot of the more inflation sensitive commodities, oil, gas, heating oil, that really spiked up last week, they pulled off of those highs. Some of them recovered later on in the week, but they're well off of the spiking level when it seemed like a lot of fear was coming into the market. And we still have to watch those things, and they're still part of the overall picture, but their panic influence, if you will, has kind of lessened a little bit right now, which has given stocks more of a chance to run up a bit. And then, of course, the geopolitical concerns that I already mentioned. And then we are still looking fairly negative overall, technically, but things are improving. And if we have a good solid week this week, we could see things shift even more to the positive side. We're going to have to see some follow through. Looking at the intraday chart where each bar is 10 minutes, here was Monday's open back on the 14th, and we started off pretty positive. Everything was looking pretty good. And then we saw sustained selling throughout the rest of Monday. And this is when the low was established. And then from there, you can see right here graphically how if for some miracle of a reason you went long right here, you had a really good week the rest of the week. Then on Tuesday, we kind of bounced around a little bit, but we saw some selling going, or excuse me, some buying going into the close. Wednesday, this was when the Fed made their announcement, and the initial reaction was negative. Well, then Chairman Powell came out and gave his press conference, and the market liked what he was saying. And so we really took off higher after that. On Thursday, it was pretty much a continuation. There was a little bit of selling into strength, but overall, we saw a really nice advance and we closed at the high. And then it looked like we were hitting some overhead resistance before Friday's session. We did kind of dance along that resistance for a little while, but then as the day went on, we saw more buying and we ended up closing at the high. So it didn't get off to a very good start, but we had a really strong finish to the week. Then just to look at some of the other indexes, the Dow was up 5.5% for the week. NASDAQ, which has really suffered the most loss during this latest downturn, it gained 8.2%. The S&P was up 6.2%, and the small caps, the Russell, was up 5.4%. Then this just gives you more of a graphical look where the NASDAQ 100 had and these numbers will look a little bit different, and I have some additional indexes here. Here's the NASDAQ 100. It was up 8.41%. The NASDAQ itself, as I mentioned, was up over 8%. Here's the S&P, which is pink, up over 6%. The Dow was up 5.5%. So was the NYSE. Mid caps up 5.25%, and small caps, even though they lagged, there are some positive things that we're keying off of from the small cap index. We're seeing them a while back now start to turn up, and sometimes that can lead the bigger stocks higher. And that's kind of, we saw that at the time, and we were watching that, and that so far that seems to be following through with that particular scenario. As far as our sectors on the week, discretionary, which has been just getting hammered lately, it saw a really good advance, over 9%. Tech, which has also been getting hammered, pretty good. The financial sector, the one sector that was down for the week was energy, because it's really been leading the way as far as what sector is doing the best right now. Well, there was some profit taking and a retrace in some of the highs that were made. And this just goes back 1 week and shows you how discretionary, even though overall, since our all-time high, they've really not performed well. But in this past week, they were up almost 4%. Energy, which would be in first place in our longer term sector view, well, it was down the most this past week. As far as sentiment, this comes out every Thursday. This is the American Association for Individual Investors, or of Individual Investors, and they're still showing an extreme negative reading. They're down below 20. That could be fueling some of the overall pessimism in the market. And these folks tend to get it wrong at key times. When they're overly bullish and near the top, we want to look at getting out or closing long positions. When they're overly bearish, at that point, we want to look at possibly going long. Because as I say in my daily videos, these folks, and that includes us, the people listening to this video are part of this group, even if you don't belong to this association. But we tend to react. We see something that's happening, and then we make a decision based on that, instead of proacting, seeing things all coming together and then making your decision that way, and then hoping what you want to have happen happens after you enter a particular position. Another thing that came out is the RIDEX ratio. They take all the bearish funds that are available and then divide it by the bullish funds. And when there's a lot of pessimism, this really spikes up. Now, it may not look like this is all that high, especially when you go back and look at where this was before. But looking back over the last few years, this is a pretty significant reading. So the way I'm taking this is we are showing more pessimism right now. And that kind of goes in conjunction with the previous chart as well. So we still might have some room to build off of that, because there's a lot of people that didn't expect this big run up in the past week. They're making their decisions over the weekend, and now they may try to take advantage of that in the coming week. And will they be right or will they be wrong? Then looking at the weekly chart of the VIX, we declined in the past week based on a closing price. And looking at the bar chart, where we were seeing a series of higher highs and higher lows, well, with the advances throughout the week, the VIX ended up really declining. We're still kind of at a pretty high level right now. We're still above this red line, but if we see more follow through to the upside, this VIX could really drop down as fear may subside. Then our Ulster index, this tends to go up as prices go down, because it's more of a worry gauge right here. It leveled off over the past week, but is still giving kind of an extreme reading. It's seeing this real decline since the beginning of the year and is still picking that up in its calculation. If we can see a continuation of the bounce going up, then this indicator will start to drop. Then this is the CNN Fear and Greed Index, and they changed to how things look. Right now we're at 39, which is coming up more to the neutral area. We're still in the fear category, but earlier in the week we had dropped below 20, and it was showing pretty extreme fear. In fact, 1 week ago it was at 18. So that was just showing a lot of pessimism. And when everybody is feeling negative at the same time, quite often that can be a good time to buy. Then this is a longer term view of that chart to give you some historical perspective. At the beginning of the week, we were down here. Well, as the week went on, this really started to improve. And this is a daily chart, not a weekly chart of this index. As far as inflation, I've taken the BDI off of here for now. It's just not really helping us. There's this constant tug of war that's going on. The Fed raised interest rates in the past week, and that's to slow things down or to try to get inflation under control. The only problem is on the other side of the coin, they are still adding to their balance sheet. There's still quantitative easing going on. And Chairman Powell said, well, maybe by May, we will start to taper or see this line go down as they sell a lot of the assets that they had been buying. Eventually, if they do start to taper, it'll look like it did back in 2018, where this line goes down. And it was trending lower until COVID hit, and that changed everything. So as I've been saying in my other videos, it's like the Fed has their foot on the brake and the gas pedal at the same time. So there's really a contradiction going on. If we look at the overall health of how really smart people view the economy, we're doing okay. If we're below this black line, that means that people aren't really freaking out. Once we get above this black line, that means there's a lot of concern by people who really know what's going on. And you can just look back and see, we had a bit of a spike during the COVID plunge, but that was over so quick that it really didn't get a chance to freak out too much. Here's the whole meltdown back in 2008. And we're waiting to see if things are really turning negative from an economic standpoint. This blue line will go back above the black line, but it hasn't done that yet. And then another thing that we're keeping an eye on is fertilizer, and that can really bleed over to inflation, especially with you have Ukraine, who's a huge producer of wheat. Well, they have to have fertilizer, and farmers everywhere have to have fertilizer. This has really been spiking up, and that can eventually lead into an increase in inflation. Then looking at breadth within the market itself, we did see an improvement based on price and a little bit of an improvement. It's a little hard to see. We're coming right back up to the moving average based on volume. So there was an improvement from the previous week. Here's the advanced decline ratio, where we're seeing the red line turning up. It tends to go faster. And the blue line, it's still below this other blue line, which means it's still negative, but we did see some improvement overall. Looking at the new highs and new lows, we did see an expansion in new highs this past week, and the trend is trying to continue overall to the upside. Accumulation distribution, this is, I know this is pretty hard to see. I even tried to make the chart smaller, but we're right about on the moving average right now. As far as our trend, this is the thing that's still giving us most of the danger signs right now. The red line is well above the green line, and that means the trend is negative. The black line is above 20, even though it rolled over a bit, it's still above the moving average. So it might be a slightly weakening trend, but it is still a trend. And since the red line is on top, that tells us that it's a negative trend. For this to turn back positive, we want to see the green line increase and the red line decrease. Our Arun didn't really tell us much this week. When you see the red line pegged all the way at the top, that means sellers are in control. When you see the green line pegged all the way near the top, that means buyers are in control. Well, the red has come down ever so slightly, and the green has also been declining, even with the advance this past week. So when we compare the two, our oscillator chopped sideways from the previous week. The mass index, we're just waiting to see if this will drop. The first signal was generated, and that's when it goes above 27. The actual signal that we get is when this line comes back down and drops below 26.5. That's when there is an official signal. And then we don't really know what direction things will go at that point. We just know that there could be a change in trend or the beginning of a big move, either up or down. And so then we have to use other indicators to help us decide what that is. Some of our longer term charts. One thing that is positive when we look at our longer term pivot points, the S&P was able to get back above the pivot here. So we're in a slightly positive bias right now based on the weekly chart that we're seeing right here. Then looking at our weekly trend, we are ever so slightly above the moving average. The moving average is at 44.23 and we closed at 44.63. So we're 40 points above this 50 period moving average, because there's 52 weeks in a year. So I use a 50 week moving average. So that's more positive. We're starting to regain this moving average. Then using two moving averages, we have a 13 period and then the 50 period. We're still seeing this cross, potential death cross happening. It hasn't happened yet, but if you can see real close in here, we came all the way up to this 13 period moving average. That's where we closed on Friday. So that could be acting as overhead resistance. What we want to see if we're turning back positive is price to break above both of these moving averages and then eventually see the moving averages turn back up. Of course, the opposite is also true. If price goes back down, we might eventually see a death cross here, and that would be a much more negative technical picture. Here's our BPI, the bullish percent index, and it had a strong week also. It was pretty negative at the beginning of the week. As the week went on, we were able to shoot above 50. When we're above 50 and climbing, that's considered positive. When we're below 50 and declining, that's negative. Well, we shot above 50 and we're not necessarily showing any kind of an extreme reading right now. So this potentially could have more room to run to the upside. A Chaikin oscillator is also coming off an extreme negative reading and saw a bounce back up. And here's a longer term view of that same chart. So that's right now portending to positive things. Chaikin money flow has not turned positive yet, but is showing some signs of improvement. The force index, it's really hard to see, but there's a little teeny tiny green right there. So it just went slightly positive this past week. The McClellan oscillator, it's giving us some kind of an extreme positive reading. Now it could go higher or it could fall back a little bit and then go higher. Just because we're in this area doesn't mean that things are going to automatically turn around. Sometimes it does, and we see a pretty quick reversal. But there's other times when this can take a number of weeks to actually play out. Then our summation index, which is a longer term view of the summation index, it is positive based on price and positive based on volume. Again, I don't rely on these all that much because they're oscillators and it has to do more with how these things are calculated, but they're still pretty much negative across the board. So you could say, oh, negative divergence all the way here, end of the world is coming. Well, that may happen, but I wouldn't necessarily use these indicators to tell me that. Then the PMO, which also calculates kind of because it's using past data, as we go higher and higher, the calculations make it look like the indicator's actually rolling over. That's why I don't like these oscillators as much for longer term charts. But it's negative overall, where based on price, we did see a bit of improvement, but we're still we're still below this red line, which is negative. We did see a bounce based on volume, but we're still negative there as well. Then our PMO study, looking at those that have rising PMOs for the past week in the S&P 500, we're starting to get into extreme positive territory. We are seeing a nice advance and not necessarily extreme yet with those that are giving buy signals, and those that are above zero is starting to improve as well. RSI, it's just a teeny tiny bit above 50. Usually 50 and above is positive, and then the inverse is also true. So we're right about in the midpoint with that right now. Our special K is still positive longer term, even though it's declining a little bit, but still we're above this moving average. The short-term oscillator really showed a big improvement based on price and volume over the past week. The Williams percent R is just slightly above 50, which is also positive. Our Stochk RSI has been extreme negative for quite a while. Well, with the advance this past week, we saw a bit of a bounce, but we're still below the 0.5 or the midpoint. The vortex is still looking more negative. It switched over positive on the daily chart, but not on the weekly chart. Even though this red line is selling, that's declining. We're also still seeing some decline in buying power. Where this will turn positive is when the green line is able to cross above the red line. The ultimate oscillator is also above 50 and advancing. The money flow index, after giving us an extreme negative reading just a few weeks ago, it is showing an improvement. Looking at our different charts, the Heiken Ashi is giving us more of a doji look because we're still kind of in an overall range, and that's really more pronounced on the daily charts. So, but this does show improvement because we have an open candle. Our Kegi is switched back to black, and that's more positive. Our Renko is still more negative. It's not really picking up this recent price action because we've been here before not too long ago. Equi-volume is also with the green open candle. That's more positive. Our 1 week ease of movement is positive. And then our 14-week ease of movement is showing some improvement as well. Point and figure, we actually have a generated signal here, which could be a top breakout, a double top breakout. We had some new green X's drawn with the advance this past week. It's picking up this as a double top. If prices were to continue going up, that signal would then be justified that it's giving us right now. We did see some improvement in the 3-line break chart with an open candle for the past week. Our different trading systems, the Elder system, it's switched back to positive on the daily charts. It's now back positive on the weekly chart. However, our SAR, which did switch positive on the daily charts, when the dots are above, that's still negative. And so this might last a little bit longer. We're going to need to see some more upward movement if this signal is going to change. Looking at our broad market, here's a weekly chart of the S&P where we're kind of back within maybe the middle part of this range. Mid caps are also back to within the range. Small caps are still within the range. So we've been chopping around a lot ever since the beginning of the year on all the different indexes. Our world stocks ETF did show some improvement, but we're coming off a death cross. Mid caps also showing a recent death cross, and we saw some improvement, but we're coming right back up to this 50-period moving average. Similar action with the small caps. We're above the 13-period moving average and showing some improvement, but we're still below the 50-period moving average. The Dow is just about, you could say it's already generated a death cross, but we're right back up. Price came right up to meet all of this. It's kind of interesting how everything kind of comes together as far as price and chart action. The NASDAQ, which had seen a lot more selling since the beginning of the year, it has a ways to go to improve, but did have a good week this past week. The NASDAQ 100, kind of the same thing, coming off a recent death cross. Price is still below both moving averages, but still they were up 8.41%. NYSE also right back to the moving averages and at a potential death cross. Wilshire, same thing. Although we're not at the moving averages based on price, we're coming off of a very recent death cross. The FANG stocks, man, they were up 13.61% on the week. But overall, they've seen a lot of weakness. And really, we're just seeing a series of lower highs and lower lows right now. So we're going to have to see some continued buying for this chart to improve. ARK, which was up 18.33% for the week. Poor Kathy's just been getting hammered here. On the daily chart, it looks just about as bad, but in the past week, did see a nice bounce, but has a lot of work to do if the trend is to switch back to more positive. Here's a software index where we did see a pretty nice recovery this past week, but we continue to be below the moving average and the moving average is declining. As far as the broad market, the CRB, this is kind of becoming my main gauge for inflation. For a long time back here, 2016, 17, I looked at it, but I didn't really use it all that much. Well, with a lot of these commodities really taking off and feeding over into inflation, I'm following this very closely, not only on a weekly basis, but also on a daily basis. But we are in an overall trend right now in the weekly chart, even though we saw a bit of a pullback this past week. Gold, which was trying to break out, then came back down. And that's one of the spike commodities that we saw that is pulling back. Same thing with silver. It spiked up only to fall back. Oil, the big one, it got up to over 130, fell back, actually came back down into the 90s and then closed at 103.09 on the week. The dollar, which has been doing very well, did see some pullback, but overall, we still have a pretty solid uptrend on the weekly chart. Looking to compare some markets. Now, this is a monthly chart, but I like to look at it every week and talk about it. This is, should you be in stocks or should you be in bonds? If this chart is advancing, that means that stocks are outperforming bonds. The inverse is also true. As this chart declines, that means bonds are outperforming stocks. Well, stocks still continue to outperform bonds and the uptrend, and we're seeing kind of a breakout over here that came through 2021, and that breakout is continuing right now. Then this is a daily chart of intermarket analysis going back 1 year. You can see how we spiked up with oil, dropped back, and then are still doing very, very well overall, but have seen recent pullbacks. The S&P, which had been going down, saw a pretty nice recovery. Gold, which also tried to spike up, is falling back. The dollar, which has been holding up fairly well, and bonds, which based on price have not been holding up very well, even though we saw a little bit of a bounce recently. Then to compare gold with the US dollar, because that's what a lot of people are talking about. Eventually, the dollar, we're going to get off petrodollars, we're going to go to digital currency, they're going to wipe out the dollar. And so a lot of people really take that to heart and start looking at buying gold because it's a tangible physical asset that you can have. When we compare the two, gold had been trying to do a bit of a breakout, but has not been able to break above these longer term trend lines yet. Then gold against the S&P, it has been breaking out, but in the past week, we saw a real decline. As the S&P went up and gold went down, that brought this overall line down too. Then looking at growth versus value, growth has really, when this line goes down, that means growth is underperforming. When this line is going up, that means growth is outperforming value. Well, we saw a nice little bounce, but we're still below the moving average overall. And then the NASDAQ 100 compared to the S&P 500, The NASDAQ 100 has been underperforming, but saw a nice bounce in the past week. The S&P 100 against the S&P 500, again, having some trouble lately, but saw a nice bounce in the past week. So what is our outlook for this coming week? The long-term trend is turning more negative, but could be improving. We're seeing a lot of moving averages come together. We're seeing either some recent death crosses or some potential imminent death crosses. That sometimes can be a big deal, but if price can get above those moving averages, that will help the overall technical picture. So we're looking better this week than we were a week ago, but there's still a lot of work on a longer term basis that needs to be done. The major economic reports that'll be coming out this week: on Wednesday, we have new home sales. Thursday, we'll see durable goods. And then Friday will be the final reading of the consumer sentiment. In last week's video, I did the preliminary reports. This coming Friday will be their final report. And then, of course, we have the geopolitical developments that are going on and changing all the time. Russia, Ukraine, the China lockdowns, and a lot of people are worried about that, mostly from a supply chain scenario. If things slow down in China and we buy so much from them, is that going to impact an already pretty messed up supply chain? So thank you very much. I hope you have a really, really good week. If you're enjoying March Madness, continue to have fun doing that. We've got spring training games starting up in baseball, and then I will look to prepare another weekly video next weekend.